Hey everybody, this is DayTraderRockStar, and this is the market radar for the first week of August, August 3rd. We'll start off the week tomorrow, Monday, and we're going to jump right into it. Um, we'll start off looking at the SPX, and we've been chopping around the highs over the last six months. It's been really a sideways consolidation, so it's not been a very trendy market. You have our micro trends on the 60-minute time frame, but it has been a sideways chop fest, really. And probably going to expect a little bit more going into this week. And when we take a look at the daily chart here, you can see a couple of things we're looking at. Right now, I have a channel line based off of 1, 2, 3 pivot areas here. It's a pretty decent candle that came out on Friday. We're not calling this the perfect opportunity because I want to take a look at the 60-minute time frame. 60-minute time frame, I expected a roll over here. Probably around here. I had an earlier last week. We're actually looking at this level or going into this area as a better opportunity to pull back. But it held up pretty good and pushed a little bit higher. So we adjusted this channel line. Still is going to play out the same way, I believe. I still think we actually have some downside momentum starting to pick up here. You can see the 60-minute time frame on Friday started to break down under 80. And, we talk about embedded stochastics, how they're a sign of strength. But they're also, they're also kind of a music chair indicator, meaning that at any moment you can get that rotation and break back down. And it does come, it doesn't always stay embedded. So we talk about maybe 3, 4 days, 5 days max. We usually look for this to stay embedded on a very strong move. Normally we want to get into a situation where we could actually start seeing like we did over here, a nice move down. You could start to pop up, overbought to oversold, overbought to oversold, and nice channels and stuff. And that's what we're looking at here. We're seeing this overbought level to oversold level, overbought level, but a little choppy. Once we got overbought, we pushed a little bit higher. Once we got oversold, we dropped a little bit more. But there was also a lot of news around this whole area that was causing a little market volatility. And again, the same thing. We got a little extension here, but I think now we have really established a nice 1, 2, 3 pattern, and we start to turn over and we start to push back down here. So definitely looking at next week to start off, a little bias to the downside, and we're going to also go into a little bit more. I want to show you the S&P, the E-mini future chart here. And this is kind of interesting too because I was doing this video before. I want to get rid of these trend lines and just show you how I built this before. This was Friday's trade, and Friday I was not on the air, but I was doing a lot of work on some charts and stuff, and I was following the markets as I usually do, and it was a nice little wedge pattern breakout, push back up. I always talk about pattern recognition, knowing how channels work, knowing how wedges work, knowing what the lines on the screens are, the moving averages, how important they are, volume profile lines, pivot areas, and support and resistance, and how to and again how patterns work. So the falling wedge pattern, a fantastic pattern to trade. You had a nice move up, and then again you can see we broke back down, we pushed back up, we pivoted back down, and then this is how we ended up. And this is where we are today, Sunday evening. We're actually starting to open up, and I think the odds are that tomorrow morning we might actually open up a little bit negative. But that's hard. That's a hard call to make because once you start to see, we have two good pivot areas here. So I'm going to just draw this line here. Represents this pivot area, the top of that line, and this top line. So you have a trend line up here, and there's always the opportunity of an early push up to that trend line and a rollover. So we're going to watch this trend line, this downward trend line at 103, 104 area. It really depends on where it's going to come in by tomorrow morning. It's probably not even going to, it's going to be maybe down a little bit further. So again, this is the overnight trade, and if we looked at the the cash. This is probably a little bit more accurate because we're not going to get that overnight fluctuation on this, and we'll be able to read into the trend line right here. But we're basically looking at these two downward trend lines. So this is where we are right now. I want to put a parallel channel in here, copy that line, and look how this pivot area down here, I just put it right to the end, how it comes down to this area and it bounces perfectly off of that. A perfect 1, 2, 3 pattern. We come down here, and there's probably some other things going on here, which was on a Friday, and it was going into the last half hour that we're getting some covering. So we got a little bounce at the end of the day, but I wouldn't put too much into it. We're in the middle of this pattern. The important concept here, and I I always use analogies when describing the market, using poker and baseball, but I also like to use fishing. And, just going back to this week's watch list, I have a tremendous watch list out for this week. It's really good quality names. They're really setting up nice. They're perfect channels and nice levels. But the market, going into early this week, I'm looking for a little downside. So how do you look at a good positive, maybe long position, yet you don't want to really take that long position if you see the market actually giving you some weakness. So it's like going fishing. You might have, you might think, hey, this is going to be a great day of fishing, but there might be a storm, or you don't want to go fishing when conditions are working against you. Now, it's not the best analogy, but in my head, as a fisherman, what I'm thinking is, it's a good time of the year. Maybe I'm going to go in the evening when the fish are normally biting. I have the perfect bait. I have everything, but all of a sudden, it's the wind is ripping and it's starting to get thunder and lightning. It's just not going to work. You have to pick your time to go, just like anything else. Any great analogy, there's always a good way of looking at it. You want to bet when you have the best hand and stuff. So we're in the middle of this pattern. We're in the middle of the daily here. Daily starting to move back up. It looks pretty good. We cross back up aggressively, but I have a feeling this pattern is going to play out. We're actually going to make a little move back down here. And if we do move up here and break out of that, that gives us another signal altogether. But I think there's a lot more room down here for us to move back down, back down to support down here. So that's what we're going to be watching for early this week. I did mention the HPS watch list have some great setups on it this week. And some of those setups are actually based off of buy triggers. Normally they're buy zones. So if I have a good setup like a Procter & Gamble 1, 2, 3 pattern, I'll set it up, with a buy off of a lower trend line if we're getting down to it, knowing that this is the reaction we're going to get. But in the case of the market pushing back down, sometimes you don't want to buy into that weakness. So I put a couple of the HPS setups on buy and strength. So it's a little bit different. Just make sure when you look at the HPS watch list, just kind of recognize if it's a trigger or a zone. Zones usually we buy into that zone, which is a combination of multiple indicators lining up, versus a trigger, which is usually buying on strength. And we could take the shorts also. I actually have some SPXU, a little hedge, but longer term I am bullish. I mean, we have the Fed rate increase coming down the road. It's been so transparently talked about that September has been shoved down our throat, but now maybe over the last commentary last week with the FOMC decision came out, and they were talking about conditions a little bit harder to call for a September liftoff. So now they may be pushing it off a little. Doesn't matter. I think when the time comes and whenever that happens, I think the market will take it in stride because it's just been out there for so long, and the market can adjust to those things. It's already digested it, and it's actually priced it in basically. So and next week let's take a look at our news coming out next week. The big thing here is on Friday. I mean, in the morning, early in the week, Monday, we have the ISM index, construction spending, factory orders on Tuesday, ISM, initial IEDP, employment change, a very big one on Wednesday. But the big one here is going to be on Friday, and this is the non-farm payrolls, unemployment rate. Again, this is what the Fed is really tracking. They said it's really data dependent, and so a lot of people will be watching that report out on Friday. We will too, of course. We'll be broadcasting it live. As we broadcast the markets live every day, and let me just throw that out there. If you're not familiar with Day Trading Radio, definitely stop by anytime, www.daytradingradio.com. Watch the markets, watch us trade live for free. Or you could join the membership crew, the brigade, and get all the benefits of Day Trading Radio. Get the watch list, all the triggers, all the alerts, the real-time alerts, the text, the emails, the chat rooms, and everything else that goes along with it. There's so much. Just check it out. And very, very reasonable, too. So downward bias going into next week. How far do we go? Well, we're going to watch that 60-minute rotation. I have a feeling we might get down there. How far we come down here. I'm going to guess that we get down there. We're not going to get embedded again. I think we get a fast move back down and a fast little bounce, or at least we're going to look at that. I think if we got one more pullback here, I'd probably cover the SPXU. I think this pattern eventually breaks higher. How far down do we go? We can actually get all the way back down to this recent support line back here. There's a lot of support back down here in the 2065 zone. There's a perfect 1, 2, 3 pattern. This will be the first area, but we're also going to pay attention to this right down here and see how fast that rotates back down. But that's, again, medium term. The big picture is, the 5 minute, where we'll make that's our bread and butter. That's where all the futures traders are trading the 1 minute time frame. We compare it to the 5 minute. We find the divergences. We see the flags. We see the best opportunities for the short term moves. And, that's where all the action is. So when you do come to the site, you're going to see a lot of that 5 minute, 1 minute S&P cash and the ES Mini and the NASDAQ and the Dow and all the stocks and stuff. So that's going into next week. Slight bias to the downside, probably starting off tomorrow morning. If I were to guess, I would say we start off a little negative in the morning. We make our way down. We'll wait for those patterns to play out, wedges, divergences, channels. If we also, know how to use the triple stochastic setup, very easy spot, short zones in a very trendy market or buy zones in a very trendy market. Also reversals based off the divergences, the triple threats, and the flag setup. So we have a lot to work with this week, and we have a great watch list. And I want to throw one out for you on the watch list. Bed Bath & Beyond is something similar to what we were looking at. I put this one out as one of our best bets, and I put that one out as a freebie. It's just a good channel here. It's what we call a channel within a channel. This is just trend line, how we broke down, but there's an underlying trend line that we call that a trapdoor trend line. This is coiled up where we have a series of lower lows on the stochastics, and lots of times this is a great timing if we move up and time out here. Typically, this pattern breaks out. We break out of this coil stochastic as the price is breaking out of the underlying channel. So we have this underlying channel with the stochastics. Bad news coming into this market kind of trumps everything, and all the cards are off the table. But right now, this is something we're going to be watching going into next week. We're also going to start paying attention to Apple, AAPL, back again, because it's right back down to the 200 period moving average, a lower level of support, and oversold for the first time in a while. So this is also looking pretty good at 121 and change. And there's a lot of other great stocks being set up. So we have a lot of work to do this week. But again, starting off the beginning of the week with probably a 2 hour down call. 2 hours down, 2 hour down. And if you go to Market Radar on Day Trading Radio, you'll see what those mean. But basically, I'm telling you, again, better shot to the downside move early in the week, Monday, tomorrow, and we'll be broadcasting it live with you. So I'll see you in the markets tomorrow. Have a great evening, and talk to you then.